Good morning, traders and investors. Todd here of TradingAnalysis.com and Inside Edge Capital. Hope you guys are well. Happy Wednesday. Let's get into it here. We are now in earnings season. 1/3 of the S&P 500 companies are reporting earnings this week, and a lot of interesting technical development, and we'll get into it here. Bring in the trading analysis team. I'm watching them fix Alex's audio. Alex, get your headphones on, brother. Oh, he says.
I'm coming.
That's all right. We're waiting for you, man. It's all good. Everyone waits for the Serbian James Bond. Terry, what's going on?
It sounded like little slight moanings going on. I didn't know what was happening.
Oh, Lord. Hey, I found this, I've been falling victim. It's actually interesting. I've been falling victim to Instagram ad targeting. Check out my T-shirt that I found on Instagram, which, by the way, I have a funny post to go out. So check my Instagram. But you see my shirt. It's a few weeks after the fact, but Silicon Valley Bank Loan Officer of the Month, March 2023. I thought it was super funny, and I had to get it. So, all right. So interesting. Market sold off, kind of broke through this dreaded, bloody, evil, horrible April range. Not surprised to see us break through the February 2nd, which has been, Groundhog's Day, my birthday, pivotal point in the market.
Birthday.
No one cares about that. Groundhog's Day is much more important. But we broke through. It was trying to hold support. We'll show you in the NASDAQ. We finally broke through. Everyone kind of began to throw in the towel a little bit, which we expected. And then, boom, Microsoft comes back with solid earnings, as does Google and Visa. And earnings overall have been pretty solid. So opening thoughts here, guys, before we jump in.
Yeah, we were talking earlier, UPS kind of scared the market yesterday, coming in before the open with a miss and a big miss, and the UPS is down like 9% this week. So, but most of the earnings reports that I was looking at, I've seen beats and guidance at least in line or higher, and most of the things come. So I think the majority is there, but Boeing had a miss, and I think you were saying Boeing was up. So Boeing's still losing money, right? Still coming in at a loss. And how does that stock price go up, right? It's forward-looking. I think more of it is forward-looking rather than the beat or the miss on the actual earnings. You've got to read a little bit deeper into these earnings reports.
Yeah, and sentiment, I think, is a big thing right now. Sentiment is widely, I would say, widely bearish. I think investors are expecting recessions here, if not coming. We have some clarity as to where the Fed is going to stop raising rates. We think 5.25, and then they're still pricing in hikes in the back half of the year. And how are earnings going to be? So let's jump into the technicals here. Just get you updated on where we are in the indexes. There's a lot going on here. This is going to be the 195-minute, which is a 1/2 day NASDAQ chart. Actually, sorry, we're going to start off with the S&P up top. This is 195 S&P. It's interesting, and the structure from the October 13th low is kind of driving the Elliott Wave community mad, and the whole idea here from the lows is this a diagonal? And long story short, we're blessed and cursed at the same time to be, so I would say, well-known or I would say adept Elliott Wave practitioners have been doing it for 20 years now, and I tried to get rid of it, and I can't. It just pulls you back in. Once you go down the Elliott Wave path, it changes the way you look at charts forever. It's hard to explain because it was founded by Ralph Nelson Elliott back in the 1930s, 40s, perfected in the 50s, handed off Hamilton Bolton, a few others in the 50s and 60s. Then Prechter picked it up, wrote the book in 1979 with A.J. Frost, so it's been handed down several times. And one of the points that I'm making here is diagonals really create a lot of confusion because R.N. Elliott didn't exactly give us the rules as he saw it and founded the leading diagonal. Okay, and then the rules have sort of been interpreted and changed over the years. The reason I bring that up is, okay, let's go to the NASDAQ. The diagonal, I'm not going to get into the exact specifics of what I'm talking about, except the fact that we do have some varying opinions as to what the diagonal is off the lows. So from October 13th of 22, the NASDAQ does count well as 5 waves. Now, a diagonal happens in the first or fifth wave of a motive wave, a 5-wave motive, or A or C of a 3-wave correction. Diagonals only happen in the first wave of an actionary event or the final wave of an actionary, let's call it an event, right? So for the NASDAQ, off of the lows, we do have 1, 2, 3, 4 overlaps the area of 2, which is the feature of a diagonal, and then we did break above the February 2nd highs, and that would suggest it's 5 waves. Now, there's some debate as to whether in a contracting or expanding diagonal, how the lengths of subwaves 1, 3, and 5 must be. And that's the heart of a lot of confusion that's out there, because really there are no written rules for this. Ralph Nelson Elliott did not give us the rules, and multiple analysts over the years have interpreted them to kind of fit their own needs. Let's leave it that way. So the question is, do we have a completed 5-wave move off the lows? Okay, and we would then say, okay, we're going to need a significant wave 2 correction. Okay, the NASDAQ, for now, what we're looking at is this is the final 5th wave of a diagonal, and the way we're looking at is it's ABC. This is the B wave pullback. So from the 195, we'll get down to the 97-minute chart, and we will identify some support. So here we go with some pretty key support in the NASDAQ, which this was the action plan that we left our clients yesterday, was heading into Microsoft and Google. If we don't hold 12,600 down to the prior 4th at 12,521, what was going to happen is we would have to cap off the 5-wave move from the October lows. If we held, we may have additional upside, which so far, based on Microsoft and Google, it looks like we may have additional upside in the diagonal, being that if we're going to hold, the NASDAQ's up here pretty well pre-market. The S&P is a little bit more confusing. The growth trade has been on its front foot. Value trade has been on its back foot since this October lows. That's kind of changed in April. And if you've been listening to this show, we've told you that from an interest rate point of view, from a seasonality point of view, and from a technical point of view, value trade is in favor. And that's what's happened. Since we met last week, the value trade has done well. And Alex and Terry and I have been tracking that pretty closely. Now we got to see if the tide is going to change with today's good tech earnings. S&P on the other hand did not break the February 2nd high. So then calls into the question, and I'm talking right to hardcore Elliott Wave gurus out there. If we are going to break down, if the S&P is going to break through some of these support levels, which I'll show you in the next chart, does that leave a 5-wave diagonal with truncation in wave 5? Okay, now this is really getting into the Elliott Wave stuff, and trust me, I love Elliott, but I hate explaining it because everyone's convinced they know the rules, and they say their way is gospel, which it's a 100-year-old methodology provided by a genius who's very much under-celebrated and never handed down the rules to us, so we're left to interpret. So can there be truncation in 5 of a diagonal? Down to the 97-minute chart, same question, okay? Is this a potential wave 4 if we hold support in the S&P? Support really was into yesterday's close at about 40.70. According to this, we cannot break wave count and validation, which was going to be 40.39. And with the boost this morning, we'll see if we can go and mount another wave 5 move, breaking the February 2nd high, giving us 5 waves from the October low. 1, 2, 3, 4, 5, eliminating that conversation of truncation. Okay, this is going to be pretty significant. Okay, and everything we're doing here, we're going to try to fit a week's worth of work into 30 minutes here with you. Everything we're doing is trying to answer that question as to where we are going. 2 other indexes I'll put in front of you, the Dow. Okay, go ahead and try to give me a bearish count on the Dow. Can't do it. Can't do it. I mean, if you want to say that's 5 down, okay, but that's 3 down, which means we have another 5 wave move to go. So if this is the end of the road for the Dow, it's going to come from higher. The other side of that answer, the other side of that debate is poor small caps. Small caps are getting absolutely crushed in here. Large cap is leading the way, and I'll show you that quickly on Optima here, but there's not a bullish count, as you can't honestly give me a bearish count in the Dow. I can't honestly give you a bullish count on the small caps. So the market is it's pretty confused in here, and that's fine. You know, the market's got to figure itself out. We can't force our way on the market, okay? We have to simply be subservient to what it's giving us. So a couple key sort of rotation concepts to help us answer this question. We are seeing a return to large caps, all right? So this is going to be the weekly RRG of small caps, mid caps, and large caps. All right, this is the weekly, and then let me just slide the monthly over here. Come on, get everything on my little screen here that I share with you. So monthly on the left, weekly on the right. And what's happened is you can see ever since pretty much down here at the end of 22 into the first quarter of 23, your small caps went on a tear, and this is where outperformance to your benchmark exists, right here in this shape. Okay, so small caps, mid caps, and then the large caps, the top 200 index was kind of messing around down here, not doing much, not too far away from the center, which is benchmarked to the S&P, but all of a sudden here in the monthly, we're starting to head in this direction, and once you start moving, getting past a certain degree heading, that starts to indicate that we might see outperformance. This is the monthly of large caps, and here we are on the weekly, same thing. Small, medium caps rotating out, large caps rotating in. Now, a lot of that is driven, and then the next layer we'll get down is value growth. We've talked about this a whole bunch. It's so important. A lot of that has to do with where rates are going. U.S. yields, short and long, are driving the rotation. That's the key. And it's that macro understanding of interest rates as they impact equity markets and equity investors' preference for value growth in various market capitalizations that will help us determine where those indexes go and help us answer the Elliott Wave question. So on the weekly, look what's happening here. We have top 200 growth. So large cap growth has been rotating in. Each one of these dots is 1 week of action. And look at small cap value getting smoked. Mid cap value getting smoked. Large cap value starting to rotate in. Starting to be, coming out of the basement here, right? And then mid-cap growth is following in the same direction, but I'm wondering, we're starting to see some evidence on the daily that mid-cap growth might start to head higher here. So seasonally, this is a period, April, that favors value, and we've seen that start to happen in the large cap. Value has outperformed so far in April, and then with today's big earnings, and of course we have some big ones coming up next week and the rest of this week, we'll see if this shift goes back into value, okay? And I'll finish here with rates, which, again, it's all about rates. Everything we're focusing on here and the way we're seeing the stock market respond is based on movement on the 10-year plus U.S. Treasury. I've updated the wave count. We've been sideways. We've held 3.3. We bounced up to about 3.5. We're mostly range bound. I just assigned a wave count to it, which does expect yields to break through the 3 handle, grab a 2 handle, watch how the stock market responds to its preference to want to be in value or in growth, and which sectors and industries are moving based on the movement here in yields. This is the key driver in here, and that's the secret to, from our point of view, outperformance to your benchmark. Terry, what say you, sir?
Excellent analysis, and thanks for the lead in there on that rotation. This screen here, and I'll take clients through what's happening here in the markets. So here we go. So after a period of about 3 weeks of mostly sideways price action in both indexes, the S&P and the NASDAQ have been very quiet, right? The volatility index has been very low. Yesterday's price action, again, following that, probably the UPS announcement before the market, but we sold off in probably the largest single day move that we've seen in quite a while. I think the next largest candle I've got is way back here in March 22nd, right? So that said, I will say that we are still holding both indexes above the 50-day moving average. Now we've got 2 days of price action behind us here. Looking over here, 1.5% down for the S&P, 2.12 down for the NASDAQ, and 2.63 down for the Russell 2000, as referenced by the IWM here. Interestingly, the only 2 sectors that are essentially neutral this week are staples and utilities, while we're getting the pullback in most of the other sectors, and it's fairly broad based. And you can see obviously this little table over here is representative of this chart is representative of what's in this table, and we have the communication sector and technology, consumer discretionary, financials, and all of that. They're underperforming. So looking at our relative strength sector leader scoreboard, this takes you out a little bit further. Obviously, we're not looking at a single daily time frame. We're looking at a week at a time in each one of these vectors, and then this vector is pulled back about 4 or 5 weeks there, right? So we can see where have these sectors been and where are they headed in over the next coming weeks, and you can infer by the direction that the vectors are pointing that we've got downward momentum happening here in technology and communications. But I'm not ready to give up on tech and communication. I don't think you should be either, as Todd, showed us that leading diagonal formation is calling for a corrective move, right? So that corrective move is happening here in this consolidation period as we've slowed. That momentum has slowed down, right? The vertical axis here is relative momentum to the S&P, and we've seen that slow down, right? But what we've got here on the x-axis is the relative strength performance. So following a period of slight consolidation, we're still sitting in very high relative strength for tech and communication, and I think we will continue to see those outperform. Now, if you're in the market for a little bit of near-term security, maybe something other than fixed income, you might want to be taking a look at the staples sectors, or even maybe utilities, and even possibly healthcare, because these 3 value sectors have recently seen a reversal of fortune, right? You can see those hooks, we call those hook reversals, that have occurred, and we've got rising momentum and we've got rising relative strength in these guys coming back. Now, typically we don't look for long-term growth in these guys, but there's been several stocks within these that have been recently setting some all-time highs. I'm going to first take you over here to technology. Let's take just a quick look at the XLK again. It's a lead. It looks like that same leading diagonal that Todd showed us in the NDX. There's a probability, I think, of a continued consolidation, probably an ABC that's going to take us down into this period here. From where then we can see some upside continuation. Right now we have a bearish MACD on it, and if you look inside the RRG of the top 30 stocks or so, in it, we have similar large momentum drawdowns, but we've got very high relative strength sitting here in NVIDIA, AMD, Salesforce actually holding its momentum and actually gaining week over week relative strength. So there are pockets of strength. There's a lot of strength sitting here in tech, but we are seeing some momentum fade. And again, there will always be some that are fading lower. Okay, so tech, hold your hat for tech. Let's shift over here and let's take a look at the staples. And so inside the staple sector, let's look first at the chart of the XLP. If you can see what I'm covering here. These lines, I really believe, even if you're not looking at Elliott Wave, which I have some form of a progressive wave count here, is simply trend lines through highs, right? And then looking for support. The first major break of the downtrend that we had happened back here in November in staples. We got a little bit of a rally. That rally came up and tested last August highs. We know last August highs are a key critical point and resistance level, and we did a slight rejection. This is corrective action. You look at this price action here, this is a corrective form. This is an impulsive move. So what happens when the impulsive moves are heading up and the corrective moves are heading down? I think that means we're in an uptrend. So the next move we've got should be in an impulsive move. Whether this is ABC or it's 1, 2, 3 of a 5-wave move higher, this should work itself out as a impulsive move. Now, so zooming in a little bit closer in time in the staples, we got the first breakout. I love to look at the breakout in price above any of these serious moving averages, 50 and the 200-day moving average, this red and blue line here. We got price action breaking out above that. And then the second breakout I call is an even longer dated downtrend that's priced through, last April's a year ago high through the December highs and simply pushing through that. What this means for me now is that this line represents no longer resistance but support. So any kind of pullback in here, I would buy that and then continue to trace these higher. So I like that. Let's take a look real quick inside the relative rotation here. And Todd, if you are ready, you want to talk about any of these staple stocks that you potentially like. I'll tell you, it not be the opportunistic time to be buying staples, but certainly if you were following these hook rotations that we got several weeks ago, these were more opportunistic entry points. But it's a confirmation that we've got this move back into value, at least heading temporarily with a very, very large strength. There are a lot of names in here that you should be able to recognize. This is Hershey Company. Hershey's setting a new all-time high. I think I've got a list of 15 or 20 stocks that are setting new all-time highs. Do I get scared of new all-time highs? You shouldn't be. That's what you're looking for. You're looking for owning stocks that are making new all-time highs, right? Hershey's has been in a beautiful long-term uptrend. It has periods of correction, right? And you can see here, this period of correction took you below the 200 back in early January, and you got a sharp reversal move out of it, and then a little sideways consolidation. Well, when we broke out of this sideways consolidation here in the middle of March, we've gone on to set about another 10 or 15% move to the upside. I think these patterns will continue. I think there's a longer term uptrend here in Hershey's. Again, we are kind of extended right now. You can look at the RSI. This is an oversold condition. You can look at the MACD. The MACD, bullish MACD is actually closed. So look for a little pullback here. Look for a pullback in Hershey's back to this 50-day moving average. And then, if you want to look at any kind of entry in that. All right. Todd, I'll give it back to you now.
All right. Good work there, Terry. Yeah, I think staples, and we have a pretty good debate going on here in both YouTube channels on the NASDAQ and XLK. I want to hit that quick. Turn over to Alex here in a second. So let's do staples first. I like XLP. Alex, just walk us through this. I'll show the chart here. One sec. XLP. There we go. So staples are breaking out, as Terry said. Showed you some names. I'm going to show you some industry groups that we have our eye on. Staples, as I said, seasonality, defense, value is in favor. So I'd like to see a little bit of a pullback here in XLP. In terms of industry groups that we're looking at within the staples, let's pull that over. And so, where are we on staples? So here on the weekly, we can see XLP. This is cap weighted in the top right, is moving into the weekly. So it's showing a lot of relative strength here in March and April. Equal weight staples right there. And then this is actually small cap staples. So, what are some of the industry groups within staples that are leading? A few I have laid out here for you: food retail, brewers, also household products, packaged foods, and meats. So staples are certainly on the move there, as well as the non-alcoholic beverage industry. I mean, Monster just continues to be monsters. So we saw brewers, distillers. So there's some good action there in XLP. All right. The other thing is back to the NASDAQ. I hear what you guys are saying. So first thing over on the Trade Analysis channel, let's just talk about that quick, is the NDX. So Oleg is saying, can this be, you have to use your imagination here for a sec. Could this be A, this B, and then into a diagonal C? Yeah, that's possible. So this would be 5 in A, down in B, and then this would be 1 of C, 2 of C, 3 of C, 4 of C, 5 of C. The good news there is the implications are the exact same, whether it's this wave count, because this wave count calls for a new move higher and then a drop. If it's like Oleg was saying, which is A, B, and then 1 of C, 2 of C, 3 of C, 4 of C, 5 of C, higher, and then we drop. Same thing happens. And then Scott over in the trading, or in my channel, was saying, take a look at the daily XLK. I hear you. Okay, it's diagonal up. And then we're going to have a wave 2 correction. Okay. Now, the wave 2 correction, as Alex will tell us, we should get to the 38% retracement on a diagonal. So that's entirely possible. Okay. So we might have a 135, 130. Now, here's a count. And again, this is what I hate and love about Elliott Wave all at the same time. And I shouldn't say this is our primary product. It's not formulaic saying here's what the future holds. It's a way to interpret the best you can, all available information now, and put yourself in the best so sort of risk controlled portfolio going forward. So there is another count, and Alex, save me some flipping around. Our triangle Y, is that in yellow?
Yellow count.
Oh, that's in the S&P. Yellow? Sorry, I didn't really plan on or is it in the S&P?
It's on the S&P yellow.
Okay. All right, so here's another possibility. Okay. It does still allow and would require a drop, which is, we could be doing Y wave to complete 2. So you would have W. There's, if you think about it, actually, and this answers a lot of questions. And I don't want to get into this Elliott Wave discussion, but the move from the COVID lows really wasn't 5 waves up to here, unless you use truncation. Okay, so that would be WXY, or sorry, ABC for W, connector X, and then Y wave begins a triangle, which would allow one more sub 4K move, and then we push higher. Right, so I'm with you. I'm open to the idea that we may be in a correction. SMH, we had an AMD trade on. We stopped out of it on a significantly trailed stop. We made 30% in the stock. We were up like 50%. So SMH is kind of like, it's like that XLK looking at the diagonal and the downside. So we might be in for a more sustained wave 2 correction, whether it's a wave 2 or a different correction, but down into these levels. But the fact remains, especially in SMH and XLK, you have 5 waves off the low. And 5 waves is pointing to the direction of the trend, which is up. So, we might have to deal with a lower push. Now, a few stocks I want to put on your radar. Off topic, Crocs, going over to consumer discretionary. This one is a holding of ours. We have it in our stock swing desk. I'll flash you here quick. We're in at 120. Here was the setup chart in Crocs, and I bring it up because we've adjusted stops. We have earnings coming up tomorrow in Crocs. So we bought the wave for pullback here, 119 in CROX. Here's where we are now. There's our entry. We've adjusted stops, and those of you who've been following know we've been talking about this trade. So this is a long. We've adjusted our stops just into the 135. So we're long from 120, stops into 135. We are coming into earnings tomorrow. It's going to be tomorrow morning. Will be earnings in Crocs. Looking for one more push up in Crocs. Another one that we put on was Dexcom. This is another entry, Dexcom at 124. And we are coming up on earnings as well. Terry mentioned healthcare being very strong. Dexcom earnings are going to be tomorrow after the bell. This is a new trade we put on coming out of the triangle. A lot of relative strength in days that see a nasty tape. And we're looking for stops to hold above 121 on up to our first wave 5 objective, but we don't want to lose sight of the forest for the trees, and see that we are potentially in a much longer breakout here in Dexcom. You know, you look at this. Is there any clearer of a 3-wave move down in the market? I mean, that's 3 waves. That's a triangle, which means we have one more move before we see a pullback and ultimately higher prices. So watch for Dexcom. So we have a bunch of stocks we're watching. We manage a live stock portfolio starting on Mondays. We do macro. We look at the big themes driving for the week. Then we break down to the sector and industry level, pull out the favorite stocks, do fundamental, technical analysis, and consider for inclusion in the portfolio. Alex wants to focus on energy, I believe, today. Is that correct, sir?
Yeah, we did present last week our potential triangle on the XLE ETF, and we showed a couple of stocks in the energy sector which are due to a pullback, which is unfolding now. So I'm looking at that pretty attentively. Also, oil has a 5 waves up from the last lows. So it should coincide with a possible movement on the upside and triangle breakout, which will give our stocks that we are watching headwinds on the upside. So I'm focused, of course, on a couple of other things. There is a 10 to 15 stocks we're going to present now on our members webinar. But for this, I would like to show this triangle in XLF and XLE and a couple of stocks that we track.
Yep. Let me see here. Let me flip it over to you. Light. I'm just flipping this off. Yeah. So I'll pop this up real quick and I'll flip it back to you. So yeah, this is
sure.
Sorry for the white chart here. Nice 5-wave move up in crude oil, followed by a 3-wave push. Broken trend line resistance now becomes support. And as Alex said, we're starting to see rotation back into energy. And then, Alex, I'm going to flip it to you. So turn your camera on. And energy is showing some interesting developments. So you're up.
Yeah, so this is our wave count on the energy XLE. So we have actually, this has been going on a fair for the last couple of months. We identified this as a potential triangle, which is now very close to reaching the fourth wave ending. So that will be a 5-wave move. Triangles are 5-wave moves, and they're usually actually expression of the balance of forces, because you see prices goes up and down, so nor the bulls or the bears are winning in this game, and triangles can last for some time. This one is going on from almost July of June 2022, so it has been almost a year of this triangle going on. So I think we are coming to an end. So our support levels are usual E-wave targets, which we are slowly itching to. which is around 79.87, from where we would like to see a triangle break and a further push higher towards the completion of a higher degree wave 3. So triangles are also very telling because they're the last balancing forces act before the ongoing trend is done. So we actually know by looking, and if this turns out to be a triangle, then this will be the last hooray before we see a larger correction. So this gives us a pretty large visibility on our plan how to trade that. Of course, if we see this as a triangle and we see a confirmation on the upside, there is a couple of stocks we look on the long side, and then when we get to this target, if this triangle portrays to be the pattern that we are looking, we're going to look to go on a short side. So we looked a couple of stocks last week, so I'm just going to show you the developments that we are looking. So this is the ExxonMobil. So we looked for a 5 waves up, which is actually unfolded pretty nicely. It's a pretty clean wave count. So gap is around 110. And we have a small 5 waves down developing from highs on a smaller time frame. So I'm looking for an ABC pullback down to this gap zone around 110, 111, 19, from where we should probably see there is also large trend line of a higher degree trend, which gives us a nice support level for the further continuation on the upside, which goes in line with this XLE triangle. So the next one is APA, which we presented last time going into a pullback. So I have this as an ABC. It actually acts more like an oil. So 5 waves up and the ABC pullback down. We are very close to target, around 32 to 34. And the next one is DVN, which is also in a nice pullback after 5 waves up from lows, going to our target around 50, 52, 48. So this is a pretty premeditated zones where we expect to become involved following the triangle. So basically we follow the sectors RRG, then we go to Elliott Wave, drone out a triangle, and then identify stocks which has the best wave counts for the possible trades on the upside.
Well done, sir. Well done. Flip your camera back on. I want to see your pretty face. And yeah, so we have to see. We have Meta coming tonight after the close. That's one we want to certainly look at. So here's your actionable zone there in Meta. Looking at this as a potential wave forward pullback, lower end of support down into 203 for Meta. Microsoft was interesting.
You're not sharing.
Oh, thank you very much. Thank you.
Yeah, Microsoft earnings last night, I guess we got a boom coming out.
Oh, sorry, I didn't mean to cut you off, Terry. That I don't have your camera on this screen. Apologize, I didn't mean to cut you off. There's that pullback in Meta right there into 203, and I'll bring Terry back in 1 second. Then Microsoft is interesting. So this was the must hold zone in Microsoft. You know, we had this from the November low. We had 1, 2, and then we had a good 5 wave move in 3. We didn't have a lot of area for wave 4 to exist until you threatened overlap with wave 2. And I highlighted this. You know, these charts all go out to our customers. And we went right down, sold off into the close, and now all of a sudden now we have 5 up, right? So, I mean, from the diagonal point of view, even Microsoft, are we susceptible to this wave 2 pullback, either in the diagonal or, you know, are we going to move higher in a more traditional motive impulse that does not see overlap between 4 and 2 at either this third wave degree, right, or even smaller as you get into the smaller time frame. So it's going to be interesting. Terry, didn't mean to cut you off. Please continue.
No, that's okay. That's what I wanted to lead in because, you know, right as you were talking earlier, you know, we just had the bell. Of course, Microsoft earnings after hours, you could be tracking that move, and and it all came last night after the close. But you know, it was, if you're not looking at extended hours trading, and all of a sudden you see 7% jump, you know, on the day, because that's when it shows up on your charts. But it's not only Microsoft, the semiconductors that have been really quiet, and you know, I've kind of been cautioning and bearish it. They got a pretty good bounce too. We got a good bounce back. I know we did get stopped out of our AMD position, but you know, it's bouncing back up 2.5% today. Semi's up 0.7. So yeah, the earnings, I think, is the key thing. Now we have a GDP report, and we have a PCE coming this
PCE
week. That's
Friday,
kind of the other two things of news, but really, there's 1/3 of the S&P reporting its earnings this week. That's, I think, is going to be the thing that's driving volatility in the markets.
Yep. Or is it going to be the next week's Fed meeting too? We'll see what happens there. I believe it's a May 2nd Fed meeting, and I believe this is the second reading of Q1 GDP. I believe it's the second. I think it is. And then PCE coming up, inflation, and then we shall see. But we're eyes wide open here. We're looking at a lot of potential positions here that we want to put on, and rotation is key. Identifying what sectors are in play, because there's a lot going on here. Because the most important thing to keep in mind, guys, is the market is very sideways. We are now a couple days away from 1 year of the same price in the S&P and the NASDAQ. So right now we're at 4077 SPX. You could go back to May of 2022. So it's really important to keep in mind we have gone nowhere in 1 year, and for everyone's hair on fire, bulls and bears alike, you'd think we're 20% higher or lower from May, from that original sell-off back in late 21, early 22, but we haven't gone anywhere. So this range will break, and when enough people get frustrated, throw their hands up in the air, abandon positions, is when the market will move. So in the comments, let me know what you guys think. Do you guys think we resolve this range higher or lower for the rest of 2023? Really want to know what you guys think. Alex, Terry, closing thoughts?
It's all for me.
All right. James Bond?
Yeah, I'm so eager to see what the Fed is going to say with this latest. I'm just waiting this PCE, and then I'm very up to hear justification for keeping rates going higher.
You wait, say that again. You're anxious to hear the justification for keeping. Yeah.
With this, definitely after PCE, if PCE comes lower, I want to hear why. I mean, they can say always, okay, we want to wait a little bit, but I mean, stuff they put us on the upside with inflation. It's not something you should wait a bit. So I think CPI will go further lower, below 5%, and I think they're going to pause soon. So I'm willing to hear what the Fed is going to say. I cannot wait.
Yeah.
What justification it will be,
Yeah. Well, I think a lot of it's going to be right here, and that's the XHB, the home builder. You look at the relative strength of home building back half of 22 into this year. I think housing is going to continue to remain strong and be an upward push on reported CPI. And we did a very nice study. Terry did some really good spreadsheet work looking at the lag and the difference between reported CPI and the Fed funds. And we found that this was the largest spread going back over 70 years, and what the average sort of lead lag time is from CPI tops versus when the Fed stops raising rates. So some good work there. We'll reserve that for members, and